be prepared. So the tax benefit can be great.
Do you want to talk a little bit about depreciation? I wish James Brown was on
I think James is on it. He's in it. He's doing taxes right now. So, James is.
No, I'm back. Yeah, I mean,
Okay.
depreciation is really just a concept, and this really only comes into play if you're operating the property for business purposes, either using it as to run a business or for rental income. So really, depreciation is a concept that says for fixed assets, meaning anything that has a useful life of more than 1 year, rather than deducting the expense up front, you depreciate it over its useful life. So let's say, if you bought a stapler from Staples, that's something that doesn't have a useful life of more than 1 year. So you deduct that entire cost up front. However, if you invest in a rental property, that obviously has a useful life of more than 1 year. And the useful life of various types of property are assigned by the Internal Revenue Code. So for rental real estate, that useful life is 27 and a half years. So to make it simple, let's say you pay $275,000 for the home, you rent it out. You can't deduct that $275,000 in the year, that you purchased the house. You deduct it ratably over the 27 and a half year period. So that's $10,000 a year. So, and that's sort of, I don't want to say it hidden, but that a lot of times you hear people say that they have positive cash flow, but yet, or for tax purposes, they show a loss, and that's usually because of depreciation, which is a non-cash item, right? Because you already put out the cash when you bought the house, whether you pay in cash or have a mortgage or whatever. So let's say you have a net cash flow of $5,000 for your rental property, but then you get that depreciation deduction of $10,000 a year, right? Which is the 275,000 divided by 27.5, 27 and a half years. So that's $10,000 a year. So that $10,000 will generate a $5,000 tax benefit, right? Because you'll be showing a loss on your tax return, even though, you put $5,000 in the bank for that year. So that's that's an accounting concept, but it's important when you're trying to assess profitability, especially as it relates to investment properties. Like I said, it's not really important for purchasing a home, as your personal residence, but definitely if you're looking at investment properties, that's something that you want to factor in.
Yeah, and I brought it up because I experienced it. My accountant, we talk about it and talk about how much depreciation I'm going to take this year as opposed to last year, and what my expenses were, and did I sell any property, all those kinds of things. And that's because I'm a rental investor. I have rental tenants here in Brooklyn and the other places. So it's important for the rental investor. But for yourself, if you're going to just own your single family home and live there yourself, no, yeah. Mm-hmm.
James, can you talk briefly about tax benefits of owning a home? The one you just mentioned one. We talked briefly about capital gains. I don't know if you heard what we said, and some other things. Yeah. So we just talk briefly about like tax benefits of owning a home, especially for Generation Z.
Right. So the primary tax benefits for home ownership is you get to deduct your mortgage interest, which can be substantial, especially in the early years, and your real estate taxes. So, that helps you in the way the government is sort of subsidizing your purchase, right? Because you say, well, you know, if I'm renting, you know, I'm paying, you know, maybe let's say $2,000 a month, but my mortgage is going to be $2,500 a month. But a substantial part of that mortgage, as I said, especially in the beginning, when the interest or the mortgage loan is going to be the majority of your payment, you're getting to deduct that interest and the real estate taxes. So I also want to throw in a couple of years ago, coming in with the tax law changes of instituted by the previous administration in 2018. They capped the state and local tax deduction, which includes, you know, real estate taxes as well as state and local income taxes. They capped that at $10,000, which is a big detriment, especially to people like us who live in the Northeast, you know, high tax states, you know, New York, New Jersey, Connecticut, you know, California in there, even though it's not. So just think, you know, if you live in this area, you know, not in the city, like those multi-million-dollar brownstones like Lafayette and Reggie, but if you live in New Jersey or Westchester or Long Island, it's a good chance that your real estate taxes alone are more than $10,000. So, you know, I have clients who live in Franklin Lakes, their real estate taxes are like $40,000, right? And then when you throw your state and local income taxes on top of that, I'm sorry, not their real estate tax, but their total tax deduction before this change was like $40,000. Now this change come in, it can only deduct $10,000, which to me, I thought would serve as sort of a disincentive, you know, to home ownership, right? Because that's one of the things that you always pitch is like, yeah, well, you know, the government is actually helping you, they're subsidizing the purchase of this house, right? Because you can deduct part of your payments, whereas if you rent, you don't get anything, a canceled check, you don't get any equity, you don't get any tax deductions, nothing. So it looks like that may change again as part of, you know, the new tax act. One of the proposals was to increase that cap from $10,000 to $80,000, which is substantial because most people aren't going to hit that $80,000 threshold. But you know, that's another major benefit of home ownership. You know, besides building equity, you do get some sort of a tax subsidy from the government. And remember, if you rent, your landlord is getting those deductions. So you're just helping to pay his or her mortgage and taxes, and they're getting the deduction. So that's something to think about.
Yeah, and that was great. You know, you explained that so well, and you understand it so well. The
So you're thinking about switching
layman,
accounts?
I'm gonna give up this piano, man. I've been trying to get it. You know.
Don't give up the piano, man. Please don't get no. That's not enough.
To a layman, and to a person who's never owned a home, that's probably head spinning, you know. But don't worry, that's why you're going to hire somebody like James.
Mm-hmm.
You know, when it comes time to do your taxes, you're going to hire somebody who understands your situation.